Hello and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. Today's video, we're going to be taking a look at the stock market as well as a bunch of macro charts, indicators, and going through the Magnificent Seven stocks. So, starting off with stock market fear and greed, you can see we are still in extreme fear. So, are we around a dip buying opportunity? I believe so for some of these stocks. We'll get into that later in the video. Something else that we've been keeping track of this for a while is that ever since 1932, we've had this seasonality to be aware of that when we get a new presidential inauguration, we tend to go sideways for 100 days or so, which would lead us around middle of April, early April. So just keep this in the back of your mind. If we see this play out, we may be seeing a bottom in the market sometime soon. And this has been playing to that so far. You get a new president, all their new policies, the market's adjusting to that. And if it is in the news and the news has not been that great, it's probably in the price. So just something to keep an eye on. Now, there have been increasing talks of recessions. And one of the things to keep in mind is that the second year historically during new presidential cycles does tend to be the weakest. So if we see any major dips in 2026, do not be surprised and just keep that in the back of your mind. And if so, I want you to start thinking about this now. This is one of the most important charts, in my opinion. One of the reasons I look at moving averages on the macro time frame so much is because this right here. When we get these dips in the next recession, you don't know if it's going to be just 30% or 50%. But either way, when we get these dips, do know how rare of an opportunity it is. It may be a once in a decade opportunity or a once in a multi decade opportunity, depending on wherever the next recession takes us. I'm not saying it's starting now, but in the future, if you were to see the S&P measure it out and it's underneath 20%, those tend to be historic opportunities in the stock market. And lastly, this is another bubble indicator before we get to some other charts. And this is the Shiller PE ratio. Overall, do know that for many stocks, they are expensive. The PE ratio is the price to earnings ratio. So many stocks are expensive. It's safe to say that we are in bubble territory now. It could go higher, could definitely go higher. There's a lot of comparisons between the AI bubble now and the dot-com bubble in 2000. So we may see a pullback before getting one more violent spike up. It's been one scenario. I'm sort of seeing if it'll play out because we have similar interest rate cutting that we did in 1998. We didn't have quite the inflation problem, so that's a little bit different. But a couple periods of times that I'm comparing this to is either 1968 or 1998. So I think there's plenty of comparisons to draw to those as well. Of course, on this channel, I talk about crypto as well, and crypto still down in fear. Let's do a quick refresh. It's actually gone up into neutrality. So ever since fear and greed bottomed into fear, we've been seeing higher lows and crypto making a little bit of a comeback. But I talk about crypto cycles, I talk about mining stocks, altcoins on this channel. Subscribe if you want to hear my thoughts on that. But I know many of you here are here because of my crypto analysis. And if you are watching this, it's important to pay attention to the stock market because crypto is overall speculative tech assets and it goes the way the stock market goes. So taking a look at the S&P right now, we can see that it did have this nice candle body close on the 50-week moving average. The 50-week moving average, this orange line, is often the dividing line between bullishness and bearishness. Next week, we are getting a higher low and coming up further on that 50-week moving average. So let's take a look at some of our confirmation indicators. The MACD, it's still steepening. It may still have a little bit deeper to go. I am wondering if we'll see another retest of this low Or if that was truly the bottom, we can bounce up and out of there. Let's take a look at our stochastic RSI. We'll see that one. It might be getting ready to come out of this. So historically, at least ever since this has started, this whole bull trend right here, we have not spent this much time down in the oversold region. You could say right there was the most comparable in October of 23, but ever since this downtrend, really only one other time that we got down there. You can see the S&P also touched the 50-week moving average, and it even got underneath briefly to the 100. So if we were to see another little pullback, maybe somewhere around the 5,400 range, I would not be surprised. Let's take a look at the daily, and we can see here, all right, this is something to pay attention to. So on the weekly, it's looking like it's putting in the good base. On the daily, you can see that as it's come up to this 200-day moving average, this blue line right here, it is getting sold off a little bit. Similar things happening in Bitcoin right now. I'm not sure. Let's take a quick look at Bitcoin. So Bitcoin might be retaking the 200-day. That's good. Bitcoin's trying to front run things a little bit. But watch and see what the S&P does at the 200-day. If it's able to retake it, then the next battle will be between that 50 and 100-day, and the 200-day. We'll chop around in there before deciding which way to go. But taking back the 200-day would be very positive. And next, let's go over to the VIX. This is the volatility index. And historically, when we see the VIX getting into the high 20s or higher, it tends to be a good dip buying opportunity. So we saw it get all the way up to about 30, but it is coming back down. It is getting to some of this moving average support. So we'll see. Are we going to see the volatility index spike again? If so, you'll see those lower prices possibly spook their way back in. But if it is able to get underneath these, that'll probably be pretty good for the market. So just pay attention. If Trump's not threatening tariffs, then the market could actually do some nice things for a few days. But every time he starts talking about tariffs, the market just sells off a little bit. So every time we get positive news, that guy, all he has to do is tweet about tariffs. All right, let's take a look at the percent of stocks above their 200-day moving average. And I've talked about this. When this chart, when this indicator gets above 60 to 70, those tend to be topping areas. But right now, we got to our second lowest level. 32% of stocks were above their 200-day moving average. That October 23 area, it comes up yet again, the last time we were any lower than this. So maybe a good dip buying opportunity. We'll take a look at those Mag 7 stocks, see what they have to say. As far as the U.S. central bank balance sheet, so there's talks about the Fed keeping rates where they are. We'll go over to the monthly. Something to keep in mind is there's all this talk about slowing down quantitative tightening. Last time the Fed, and this is the U.S. central bank balance sheet, last time they went to QE, you can see there was that bounce off this light blue line. That's the 100-month moving average. Now, to me, it looks like it is looking to land right around that 100-month moving average, and then maybe we get back into QE, so quantitative easing, which the markets tend to like. So keep an eye on this as far as the 100-month moving average and see if that's indeed where we're going to get a bounce yet again. Now, like the Shiller PE ratio I showed you earlier, this is another chart to pay attention to, and this is the yield curve inversion. As the Fed is keeping rates where they are or even cutting rates, it's a simplistic way of putting it, but we see the yield curve uninverting after they had rates raised for so long. And you'll see that the market bottoms are these vertical red lines. I mapped it out where the market bottomed on the S&P. And when the yield curve uninverts, before the great financial crisis and the dot-com bubble, is around 600 days, give or take. Now, we did have a longer inversion. So are we going to have a longer amount of time from uninversion to the bottom? And it's possible. So, if we were to stretch it out, even the 700 days, you can see later 2026 might be a time to pay attention to Again, 2026, second year presidential cycle, the expensiveness of stocks right now. There's a lot to say that overall stocks are maybe too expensive. Not to say you can't find good value. I think there's plenty of good value out there, but just keep that in the back of your mind. You can still look for confirmation, good deals. But should we get into those recessionary times and we see this play out to be true yet again, you will be prepared to jump on some of those deals. We have unemployment at 4.1 that ticked up a bit, and then as far as the U.S. interest rates, we'll take a look at that right here. You can see leveling out at 3.5. So still holding strong. Again, I've been comparing this to 1998, 1997, 98, where they're holding that one more set of cuts. And then as they were raising, believe it or not, this is where the market bubbled up. And then when they started cutting by 50 basis points every single month, that's when the market was crashing right here. So once the Fed starts cutting like something's broken, that's when you want to pay attention. So quick look at Bitcoin again. We can see here, let's turn on our moving averages. We can see here, nice bounce off the 50 week. And Bitcoin is getting some good buy pressure. So Bitcoin looking like it has some strength in it, the way it's trying to take back that 200. So we need to see full candle bodies close above here. Make sure we're not getting faked out. But do keep an eye on this. If Bitcoin can start closing above 85 and a half, 86,000, that'll be really good for Bitcoin. All right, let's get into our Mag 7 stocks. So this 200-day moving average, I'm sure it's going to pop up a number of places. We have this descending channel. We see NVIDIA got down to 105, challenging the 200-day moving average yet again. So if you like NVIDIA, keep in mind this is within the range of prices that we've seen all the way since June of last year. It's just kind of chopping sideways. If you like NVIDIA, maybe it's an okay time to chip in a little bit. You can see former high at around 150, but keep this in mind. As far as this is just something I think about. As far as some of these very expensive stocks, if you're putting in 10K, then you're expecting this market cap to get close to 6 trillion. Not to say it can't happen, but even if we were to get in a bubble sort of market before falling off, I would only be looking for something like 50% gains, getting between 4 to 5 trillion. So that's just something I think about. I'm willing to be patient on some of these stocks until we get a little bit better confirmation. But do we have a buy signal coming in? Let's turn this on. No buy signal yet. And we'll take a look at let's take a look at the stochastic. Stochastic still is yet to confirm. It's still bottoming out and oversold a bit. So we are seeing some nice value here, though, at the 50-week moving average. So if you like NVIDIA, we have not been at the 50-week moving average for NVIDIA since, again, late 22, early 23. Actually, I was going to say again like it was October 23. That was over here. So not quite. This is really since the start of that bull run. So keep in mind, if we don't get good confirmation, it is possible we see this fall further down again. So, yeah, I don't think we have confirmation quite yet. Now, Microsoft. As far as Microsoft, I've been talking about how rare it is that we see Microsoft at these levels. In my opinion, not financial advice, I love Microsoft. It's one of the best stocks in the world. This is a level I would consider lower end of the channel, and it is at that 100-week moving average. And if you just take a look at rarity of how often Microsoft is at that 100-week moving average, we can see that really since the great financial crisis days, we had 22, 4. This has been basically the 5th time that Microsoft is at a level like this. So just keep that in mind. Again, I'm not saying in a recession that we can't see things lower, but this is a level I would definitely consider for Microsoft. Microsoft or Apple being at their 100-week moving average tends to be a good time long term. So if you're taking a look at stocks, just park some money in and forget about it for 20 years, this would be one that I say, for me, I would feel pretty good about if you're looking for your money to be safe in one of the best stocks in the world. Apple looking a little weak, like it might want to go there. Not quite. You can see Apple. Now we have our fib drawn from the high to the low recently there, and it's just been in love with this 1618. So the 1618 in the 50-week moving average is holding up. You can see that it came down here to that 208 area, getting a bounce, but it has that fib to contend with. So if it can't get above 219, watch for further weakness. But you can see it holding on to the 50 week and the 1618. So some sideways price action right here. You can see it's hanging on to some of this all the way back in June of 24. Probably see it better on the daily. Yeah, you can see it almost lines up perfectly right there. That price action in June of 24. So if it isn't able to get past this 1618, then I would be watching for that 100-week moving average. And I remember us talking about this on this channel last time, saying same thing I said with Microsoft, that that was a historic good opportunity. And you could have got Apple here at 170, rode it all the way up to 260. So, yeah, I'd be willing to be a little patient on Apple, see if 204 comes in. As far as Amazon coming back down to the former all time high area, you can see holding on to that 50-week kind of, it's got a lot of weakness, but holding on to it sort of by a thread. But I like this support, this 50-week and this former all time high. Let's take a look. How are we looking on the MACD? MACD, maybe it's spiking. Stochastic, I'm sure it's looking somewhat downtrendy. So possibly getting ready to cross up and over. But again, it can chop around down there. So I'd be looking at this level as a decent level, this low 190s. And when Amazon returns bullish, if it does, at 250 level would be an area to watch. Google is one of the lowest price earnings ratios of the Mag 7 stocks. So if Google is at these levels, I think, this is another one of those stocks like Microsoft. I like these levels. So we got some horizontal price support. We have the 100-week moving average. As far as just looking for good discounts and values, there you go. I think Microsoft and Google, I like where they're at as far as these levels. So we can see a little bit more downward price action to 150. But historically, Google, really good stock. I think it has a lot of future potential. But we're just looking, since, again, great financial crisis, how many times does it hit that 100 week? One, two, three, four, five got underneath it. Okay. A big six there, and then seven. So in the last 12 years, I mean, this is a once every other year opportunity. Maybe something to not miss out on with Google at these levels. So, um, again, I'm not saying it can't go lower. And if you are going to buy something around here and it goes lower, again, you should love a stock so much that if you are buying it at a level like Meta at 570, if it gets lower, then you should love buying it at further discounts. All right. So Meta, this one has been the strongest of the Mag 7 stocks. It has loved this 20-week moving average. It's the first time we've seen it come underneath it. So maybe a little bit of a warning sign across the market. If the market's getting a little overextended, then you can see Meta, hopefully it'll hold up at the 50-week moving average and the 1618. I'm looking for a bouncer. We've had bouncer before, but we're hitting a deeper moving average. And I don't think that we're going straight into a recession. I could be wrong, but I would be looking for some support here around the 567 level. I'm still eyeing Meta if we do get into any sort of a bubble or this uh, bull market continues to get up into those 800 levels. So that's what I'm watching for Meta. And lastly, let's take a look at Tesla, which has not been doing so great recently. It just keeps falling. Tesla, one of the most risky tech assets as far as the Mag 7 stocks. So you can see Tesla, after it got up to this level of 492, it has fallen all the way down and just red candle after red candle. So 55% from peak to bottom. So Right now, it is holding on the 200-week moving average, which is a good thing. When we go over to the monthly, you can see it is hitting that um, 20, yeah, the 20-month moving average, and it wicked down to the 50-month moving average. Now, something I see right here that does have me a little concerned is every time it came down to the 50-month, what happened? It eventually came down to the 100-month. So, is that going to happen again? No guarantees, but if so, I'd be watching that 170 to 180 area for Tesla. And overall, do we have a channel there? I don't think we quite have a channel there. It almost looks like we do. I'll show you guys what I'm looking at here. Um, let's do this parallel channel and let's draw this. So this is kind of what I'm looking at right here. I guess we do have a channel. All right. I thought I was seeing things a little bit, but I would argue that isn't a channel. Now, overall, if you believe in the channel names and some of the powers they behold, when you see a channel moving up, people sometimes also call that a bear flag, meaning that it can drop out of the channel. And we talked about that 100-month moving average before as well. So if you're not feeling great about Tesla, I'd say bullish wise, a couple things. We do have the 200, we have the lower end of the channel, that's fine. But if you believe in the powers of some of these shapes and patterns, not saying I always do, take it with a grain of salt, but that would be something to be careful of watching for those mid to upper 100 areas. And also, if Tesla's something you love, you can wait for confirmation. Wait for confirmation when something's this bearish and it's this oversold. Wait for the MACD to show you confirmation. It is far away from showing us that. Wait for one of these buy signals. This is a front running buy signal. And of course, we have nothing there to indicate any sort of bullishness. Yes. So could Tesla be setting up for sort of a V reversal? Sure. But I'll just say I've seen these bearish flags appearing across different speculative tech assets, Bitcoin miners, altcoins, and a lot of them have broken down. So I would I would be cautious. If we are going to see the S&P and the markets do another retest of the lows, do not be surprised to see something like Tesla drop even lower. And again, those moving averages that we have on the monthly, I'd be watching out for anywhere from 224 to the 170s, as crazy as that sounds. So let me know what you think in the comments below, and hope you all have a fantastic week. Take care.